All right, so the question is can I get approved for a mortgage with a credit score in the 500s? And the short answer is yes. If your credit score is there's thresholds when we talk about, lending and determining what your rate is, and there's thresholds on those credit scores. So a 580 credit score or above significantly increases your chances of getting approved. When you're below a 580, you're going to automatically be put into what we call manual underwriting guidelines. And those guidelines require, specific have specific credit requirements. They have reserve requirements, which is to show you have money in the bank to make the payment in addition to your closing costs and down payment. Uh, so when we get into manual underwriting guidelines, you're going to go back 2 years. And I've talked about this in other videos. You need to look back 2 years on your credit history. And you can go to annualcreditreport.com, get your free credit report. Everybody can. Avoid the pop-up windows when they're trying to sell you, a credit score. But you can download all three bureaus. And it's a detailed credit history of every account that you've had. And it'll tell you, when you were late and what month you were late and what year. So when you're looking at when you're looking at your credit report, you have to be sure you have no installment lates in the last couple of years, none. So what's an installment late? Installment debt. Let me explain that. So any type of like automobile payment, auto loan, or personal loan, or student loans. All of these are set up on what we call installment payments. So the payment's the same every month, and you just when you make the payment, in these cases, in the last 2 years, if you miss one, then those can be a disqualifier for manual underwriting. And then also regarding revolving debts, they allow, the best way to, rule of thumb is just to not have any late payments on anything in the past 2 years, installment or revolving, or student loans, regardless. So it's imperative that you have a clean payment history for the past 2 years. So that's number one. And then your employment history has to be consistent as well. I mean, your income, you have to have consistent income, verifiable, income that's sustainable, and it's been established, for a couple, minimum 2 years. Obviously, they like more than that, but minimum 2 years. And then the same with your residence history. You have to have established residence history for 2 years. So underwriting, when they look at your file, they're going to go backwards 2 years. They know what you're going to do going forward. They're going to look at your history in the past. So that's where you need to figure out what you need to do, because you can do it on your own. You can get your application set up properly with a 500 credit score or a 580, if you're able to get it up to a 580, and make the application favorable. Put the advantage into your court by providing accurate an accurate application, but also good payment history, a good work history, a good residence history. You're going to have to document everything. It's like, for example, if you're renting, you're going to have to verify those payments were made. You're going to have to verify they came out of your bank account into the landlord's bank account. You're going to have to document that with paperwork or bank statements or whatever type of payment system you're using, Venmo or whatever. We're going to have to document that it came out of this account into that account with verifiable, traceable source of paper history of that. One thing when we're looking at rent history, they do allow living with relatives as qualified rent history. So you don't necessarily have to be making a payment, but if you are living with a relative, they have to document that you are living there rent free, and that they have to verify that they either own the property or have a lease or something in place that gives them the authority to say that they can occupy that property. So that's another way. And then verify, verify everything on the application, and it's going to be important that you have a clean credit history. So, collections in the last 2 years is going to be an issue. Late payments, installment payments is going to be an issue. Late payments on revolving debt is going to be an issue because, think about it. If you're applying for a $100,000 mortgage and you can't make a $25 minimum credit card payment, really? You think you can qualify for a mortgage at $100,000? So you gotta think about that stuff, but just prepare yourself so you can apply when you're ready. So worst case scenario, it's going to take you 24 months. So you had a late payment on installment debt today. 24 months down the road, if you're clean, you're probably going to be good. Keeping that history clean on the revolving debt as well, and then your rent history. So you've got to make sure before you apply, you know what you have. You have to know what you're going to be able to get approved for. And then your debt to income ratio is going to be super important. It's going to be limited. You're going to be 31 and 43, 41, somewhere around there. So 31 is your gross income, taking your debts that are reporting on credit and dividing into those. That'll give you a percentage. And then the that's called front end debt to income ratio. Then your back end debt to income ratio is those same payments plus the new housing payments, and then that's divided into your gross income. So you're going to have to be within certain guidelines. And then finally, in addition to be able to source your down payment and closing cost, you're going to need reserves, at least a minimum of one payment available in the bank that you're going to show is available. You're not going to use it, but you're going to show it's going to be available. Sometimes it can be more. It can be up to 3 months. So in most cases, I would be, if you're going to apply, here's some things you can do. Have 3 months of whatever anticipated payment you're going to go, you're going to go in with in the bank. In addition to your down payment and closing costs, a clean credit history for 2 years, the previous 2 years. Now, if you're still in the 500s, that's okay, because if you're below a 580, you're going to need 10% down. If you're at a 580 or above, you can apply for max financing, which is 3.5% down. So it makes a difference. So hopefully you're above a 580 by doing these actions going forward. If you had some late payments and stuff, that's fine. Let's clean them up now because we need homeowners. We don't need renters. We need people that renting homes because they drive the economy. They buy things, fix up their homes, etc. Improve neighborhoods, improve values. Improve the amount of equity that you're going to get in your property faster. By doing these things. So don't be discouraged if you're in the 500s. You can still get a mortgage. You just have to follow these steps that I've shared. And be sure, just remember 24 months, go back 24 months. And if you've had some bad things, go to that month, it could be 12 months, 8 months, 16 months, whatever. And then go forward, start going forward to make it a clean history and get it figured out so we can get you a mortgage and get you into a home and you can start building equity and building wealth. All right, James Lawler, have a great day.